Gold markets expected to end this week's trade in negative territory as global stocks have hit a 6-week low. That's due to investor nerves sparked by a lockdown in China and more hawkish statements from the world central banks. This as a result of the inflation that's on the go and recession worries. Let's speak now to Matete Thulare, head of foreign exchange execution at Rand Merchant Bank, or Rand Swiss, I should say. Let's start, Mr. Thulare, with how the global markets are expected to close the last session of this week following those shaky sessions in the past few days I've just spoken about.
Good morning, Dolly. I suppose, if anything, it's uncertainty that is really invigorating the market, and obviously the risk-off continues. And I think, as the data and also the news filters through, there is recession fears that are looming. And I suppose the big one for today, as we close off, the week, is obviously the U.S. payroll numbers expected this afternoon at 2:30. So a strong figure in terms of the unemployment rate, and obviously the non-farm payrolls number will obviously lead to a stronger dollar and potentially, for the markets, we will think that potentially the Fed on the 21st of September could hike by even more than 75 basis points. So on the back of that, you've seen commodity prices fall. Gold, platinum, palladium, iron ore prices, they're also falling sharply. But also, I suppose the silver lining for South Africa is the fact that the higher coal prices continue to hold up well, which obviously is going to filter through into the export prices and obviously will help the likes of Tungela and Seriti, etc., some of those coal mining companies, and obviously that will help the revenue tax base for South Africa. But on the back of that, everything at this point in time, it is about inflation, it is about interest rates, and it is about what the Fed and the ECB are likely to do in the next few weeks. And obviously, all the statements that, the Fed members and the ECB members that they will be releasing over the next few weeks into the close of the year in terms of the guidance that we're expecting for interest rates globally.
Let's talk about the performance of the local currency. Is there something specific to be said about the performance of the rand, which has gone beyond the 17 rand to the dollar mark?
Unfortunately, Tony, there's, quite a few factors that are playing into the rand's weakness. As we said earlier, the risk-off momentum is continuing. If you look at just the inflation numbers out of the Eurozone, that has come out at 9.1%. That obviously means that the ECB for the first time is going to be hiking rates much higher than expected. Also, just from a geopolitical tension point of view, you and I spoke about this a few weeks ago. It is still continuing in Russia and Ukraine. So now the Nord Stream gas pipeline that supplies gas out of Russia into Europe, that has now been shut down for the next 3 days, and obviously that's going to push energy prices even higher. You're even seeing the Chinese PMI data and also the lockdowns that you spoke about, not looking great. So that means the second biggest world economy is obviously going to struggle. So that means from a global growth perspective, we're also going to see that struggle. And already you're starting to see even other Fed members besides Jerome Powell starting to say, look, they think rates are going to be higher than 4% in the US, and they're not expecting any rate cuts next year. So that obviously plays into the rand and obviously plays into a very strong dollar. So year to date, you've seen the rand 7.7% down. And just for the past month of August, we've seen the rand losing about 4.4%. So, there's a lot of event risk and data ahead into the close of the year. We need not forget that there's 2 central bank meetings left, respectively, for the SARB and also the Fed. But also, don't forget that we're also heading into political elective season locally. So that is also going to provide a lot of volatility. So the rand, unfortunately, has weakened. We are touching the 1730 levels. If we do break those levels, we do anticipate seeing ourselves around the 1760 levels.
Let's talk company news for a moment. Tell us about Murray and Roberts mulling the sale of its stake in the Gautrain.
So if you remember, I mean, they, have about a 50% shareholding in Mbombela Concession Company, which is the operator of Gautrain. I mean, this is valued at around 1.4 billion rands. Now, they came out yesterday with a statement that one of the options that they are considering is to increase the working capital facility by actually restructuring, their books and obviously selling the shareholding. Obviously, they do have something like a 59 billion rand order book that they need to complete. So they have said that they've got significant growth exposure in energy resources and infrastructure, but I think also they need to empower these businesses beyond 2026. So obviously, as a way to raise capital, they are looking at, selling this 50% shareholding. And I mean, they have also, which is very interesting, that they have looked at Mbombela Concession Company as a non-strategic asset. I think that is why maybe they're potentially looking to sell it to obviously generate the cash that they need to invest in these growth businesses that are related to energy, resources and infrastructure, and also mining. I mean, I think this also speaks to some of the policies that government has been speaking about, and I think Murray and Roberts want to be first in line to obviously take advantage of some of these moves.
Finally, let's talk about Truworths International's performance based on the interim results released.
Quite an interesting set of results from Truworths, to be honest. I think they've posted a record profit in the year end to June, and I think it's really partly due to strong sales that they've had in the UK business, which is really interesting, and also renewed credit appetite in South Africa. I mean, sales of merchandise was up about close to 9%, and they have had no material acquisitions in the group since 2016. And I mean, the results are really, reflective of organic growth rather than acquisitive growth. And I think that has also been driven by improved sales performance and also strong gross profit margins that we've seen from some of the retailers. Now, if anything, we have seen that a lot of the retailers do also come out to note that they were hit hard by the civil unrest that we saw in KwaZulu-Natal last year. But nonetheless, I think what they're also warning about South African consumers is the fact that we're also going to be battling with the high food prices and also the fuel prices along with load shedding. And obviously this also just means that, they really need to reorganize and rethink their business. And obviously now they're really looking at growing by launching, new brands and also obviously focusing on supply chain matters, which has been a global phenomenon, and also using their credit book as well to obviously launch themselves up with new consumers and obviously a new target set of clients. So I think it is quite an interesting set of results from Truworths, and I think if you're a shareholder there, you should be smiling all the way to the bank.
Matete Thulare, let me thank you very much for that markets update, sir.